Hello guys, welcome back to a new video. In this one, I'm going to give you a full guide on how you can trade ranges or consolidations, aka seek and destroy price action. Ranges are the worst nightmare for ICT or SMC traders. Price is basically trapped inside a range and it is not doing anything. It is disrespecting the bullish video raise, the bearish video raise, and it has no direction. Price is just running the highs and then the lows and then the highs and then the highs, right? And then the lows, and they call it choppy price action. But in this video, I'm going to show you how you can trade the ranges step by step in an easy way, a mechanical way if you may. And after watching this, after applying it to your charts, ranges will be one of your favorite environments to trade in, all right? Even better than trending days. And you will catch a lot of setups, longs and shorts in the same trading session with a really high win rate. So if you are interested in that, then make sure to stay till the end and don't forget to hit that like button and subscribe to my channel so you won't miss any upcoming videos. And now let's get started. Now, before I show you how you can trade the range, right, the step-by-step process on how you can trade the range, first of all, you need to identify or anticipate ranges, all right? So how you can anticipate a range? A range can happen for two reasons. The first reason, which is, I believe everyone knows this, is when you have a really big expansion to the upside or the downside like this, maybe because of news, right? FOMC, CPI, these kind of news. Maybe it is just a trendy day. After it, you can expand a consolidation or a range, right? So price will not keep expanding higher forever. Eventually, it will stop, right? And it will do a consolidation. Sometimes it will just reverse, but when we are really expanded like this, price will consolidate after it. So this is the first scenario on why ranges happen, all right? The second scenario is that when price takes a higher time frame, a high or low, all right? So let's stick to a higher time frame high. Let's say that we have a high like this. And let's suppose that this is the 1 hour time frame, all right? This is the 1 hour time frame. When price trades above this high, all right, in most cases, it will stick around for 1 candle or 2 candle or 3 candles, sometimes 4 candles above or at or just below the high right here. And then it will either trade higher or reverse. All right. So I repeat, once price trades above this high, it doesn't usually reverse instantly. So runs the high and then reverse instantly. Price doesn't do that. In most cases, it will stick around for 2 candles or 3 candles, all right, couple of candles. Now, those couple of candles on the 1 hour time frame, if you go to the 1 minute time frame, that is a range, all right? On the 1 hour time frame, it doesn't look like a range. But if we go lower to the 1 minute, 3 candles on the 1 hour time frame, that's a range on the 1 minute time frame, all right? And you can apply this to any time frame. For example, the daily and the 1 hour or the 15 minutes, the 1 minute and the 5 second time frame, right? So once price runs a high or a low on the time frame, on a certain time frame, you can expect for price to stick around just for a couple of candles on the higher time frame, and that is a range on the lower time frame. So if you are executing on the 1 minute, you can monitor the 1 hour, the 4 hour, or even the daily. Sometimes you will see both scenarios happens at the same time. You have a big expansion just like this, and then this expansion will runs the high, a higher time frame high right here, and then you can expect a consolidation. So this is how you can anticipate a range. And now let's move on to how you can actually trade the range, how you can actually trade this environment. So in order for you to trade this environment, you need 3 elements or 3 parameters, which is the sweep, the top, and then the flip. This is the winning formula to trading ranges. First of all, you need a sweep. and then a top, and then a flip. You notice that the top arrow is different than these two. This means that this is optional, all right? And we're going to explain each one of this just after seconds. You can have the sweep, top, and flip, and this is a really high probability setup. You can have a sweep and then a flip. This will lower the probabilities, but it can still work, all right? But having these three at the same time, this is a really high probability setups. And now let's define each one of these parameters, all right? So in order for us to do that, we're going to need a range. So as you can see on the right side, we have a range. As you can see, price is not trading in one direction. It is trading higher and then lower and then higher and then lower, right? And then higher. And it is not respecting any of the order blocks, the fair value gaps. No, it is running through each one of them. And basically, price is just trapped inside a box, right? So let's first of all start with the sweep. What is a sweep? Sweeps means that price runs a high or a low. That's it. Price runs a certain high, an old high to the left, right? Or an old low. That's a sweep. So let's first of all identify the sweep in these ranges. Let's identify all the sweeps that we have on this range right here. And this is one rule. When you mark up the potential highs and lows that price could sweep, you need to operate at the bottom of the range, at the top of the range, all right? So only look for highs or lows at the top of the range or the bottom of the range. Don't take highs inside the range, all right? Don't take highs in the middle of the range. So let's start marking up the sweeps that we have in this range. First of all, so for example, this is a sweep. Price swept this high and then reverse. We're not going to talk about reversals yet, all right? We only need sweeps or runs above all highs and below all lows. Here we also have a sweep, right? Price runs this low, this old low. We have another sweep right here. So basically this is the first sweep and then this is the second sweep. We swept the high and then we swept the low, right? And then we swept the high right here. Price rated lower, right? And then one more time sweeping this high. So price doesn't move from a high to a low to a high to a low, no, because if that's the case, then everyone would have 100% win rate, all right? So no, price could sweep the high and then one more time sweeps the high. This, I won't consider this as a sweep. Also, I won't consider this as sweep, right? Because this high and this low is located at in the middle of the range, all right? And we operate only at the top of the range or the bottom of the range. So this is very important when you mark up the highs and the lows that price might potentially sweep. So we have also this, all right? Let's put this maybe here. And I'm going to show you later on chart examples, real chart examples. So don't worry about this. We have another sweep right here. And then finally, we swept at this high right here, or this low, I'm sorry. So this is the first thing in the formula of how you can trade ranges. The sweep. We have a sweep right here. We have a sweep, right? We have a sweep on here. So you need to see a sweep. The second thing is a top, all right? We need a top. What do we mean by a top? A top, basically price after the sweep, all right? So this is organized, not to top and then a sweep. No, we need to first of all see a sweep and then a top. Top, basically price taps into an unmitigated zone, all right? Unmitigated zone above this high or below this low, or partially unmitigated, meaning price either didn't tap that zone in the past, all right? So price left it and topped, or price did a shallow tap into the zone and then reversed zones. Let's talk about zones. Zones, basically, we have two types of zone. The first zone is a candlestick structure zone. For example, let's say that price swept a high to the left, as you can see here. So this red line represents a high that has been swept and price is printing bullish candle, right? And then price, after this sweep, we have a flip, meaning price closed, this candle closed below the last down or the last up close candle that created the high. So this is the high, this is the new high above this old high, and then price couldn't make a new high, but it closed below this low right here. So if we follow structure, it will be like this, as you can see, and then here we traded below it. So this will become a zone. This is the first type of the zone, which is based on one candle. All right, this is the first zone. We have a flip, right? And then we have this zone right here. So this is the first type of a zone. The second type of a zone is a market structure zone. All right, basically price is trading higher. It is creating higher highs and higher lows. So this leg is a series of up close candles. This pullback is a series of down close candles, and then we have a flip. This is the traditional market structure shift, and now this low to this high is now a zone. All right, so topping into a zone, meaning topping, meaning price after the sweep, it will top either into this zone right here or this zone right here, and it is high probability that it will offer the rejection if it is untopped. For example, like this is untopped zone, or it is partially topped, so only a shallow top right here. So that's the first thing in our formula, right? And now let's identify the tops in this range right here. So first of all, we have, let's say that we have a candle, unmitigated candle right here, right? So we have a sweep and then a top. Now price sweeps this high, and let's say that we have an unmitigated candle like this. So as you can see, we are talking about the first type of a zone, unmitigated candle. Price now sweeps this low right here, right? And then price mitigates deeper into this zone right here, mitigates a deeper portion of this candle, right? For example, this tapped into the 50%. This one tapped into the 70%, right? And then one more time, price sweeping at this high right here, right? And topping into maybe the 50% or the 70% of this previous zone. And we have another sweep right here, but this one, the price didn't tap into anything, and this is okay, all right? Price doesn't have to tap into anything. This is why this is optional. And then one more time, topping or sweeping this low, and in this case, we have a zone. We have the second type of a zone, which is this type right here. This is a bearish example. This is a bullish example. As you can see, we have the market structure shift right here. We have the first top, and then this is the second top. So a sweep inside this zone, right? And then price traded higher. So this is the definition of the top. And now let's talk about the flip, the last element of our range trading process. So we need a flip, all right? So this is how you trade the range. You want to see a sweep, or at the bottom of the range or the top of the range, sweep above an old high. You want to see a top, price topping into an old zone. It could be like this or this zone, right? This type or this type. The next thing is you want to see a flip. A flip is this, right? This is a flip. This is a candle structure shift flip. You can also see flips like this, but in most times it is better to use the candle structure shift flip. For example, let's say you have a 1 minute sweep, right? A 1 minute range. You will find candle structure shifts in the 1 minute zone, right? In the 1 minute time frame, or the 15-second time frame. In the 5-second time frame, you will see this market structure shift, traditional market structure shift, all right? But it is better to use this. It is quick. You will get a better entry, an early entry, right? And since we have these two in check, the flip will likely to work with only a candle, right? So the flip is this. You want to see the last candle, the last up close candle that created the high, to be broken with a body closure, guys, with a body closure. This is very important. below the low, not just the body, all right, below the wick, all right. So let, for example, we have a wick right here. I want to see this candle close below the wick, as you can see. So let's go back to our diagram right here. So if price wants to go down, it will give you that first type of the flip, the candle structure flip, like this. Price sweeps the high or the low right here, and then it will give you the flip right here to enter from. Another time, another one right here, sweeps the high, and then a flip. Here also you will find a flip. So you will always find a flip, guys. Always, 100% of the time, if price reverses, it will give you the flip. One more time here, a CSS flip, like this. And then here, maybe price decided that it is time to leave the range. And in most times, it won't give you the CSS, all right? So it will just keep going down and down and down. And if price gave you the flip right here, you really don't want to take price higher, because as you can see, we basically left the range. All right, so now you can prioritize selling when price pulls back into this zone right here. All right, so if we put the RR tool, this could be your entry right here. This could be the first entry. I don't like to target this, no, because price can trade higher and then one more time sweeps the low, right? So don't be greedy, especially in the range. You can have another entry from here, another entry from here after the sweep, the top and the flip, another entry from here, right? So basically you can take longs and shorts at the same time. And this is how you can trade ranges. And now we need a chart example, all right? I'm going to give you one chart example, only one, explain it in details. And after that, it's your job to find more examples and apply the same thing that we talked about here, all right? So let's move on to the chart example. All right, so this is the chart example that we're going to operate in. As you can see, this is a range. We have an expansion up, right? This is the 15-minute time frame, all right? We have an expansion, a strong expansion to the upside, followed by a consolidation or a range, and then another expansion, all right? So after an expansion, all right, you can expect a consolidation or a range. In this case, we didn't take a higher time frame high. So this is the first scenario of how you can anticipate a range, expansion to the upside, and then a range, all right? So as you can see, price is trapped between this low, and then this high. So price rated all the way to here, put in this high, and then put in this low, this valid low, and then this high. So here, price is trapped between these two. As you can see, we don't have a body closures or break above this high. We don't have break below this low. So all this, right, is a range. All right, so here let's write in the steps that we need to follow. So first of all, we need the sweep, the top, and then the flip. So let's identify sweeps and then tops. And as you can see, I posted this trade idea on my Twitter account, right? It was based on the 3 steps that I've explained in this video. And this is the same range that we are explaining right now. So as you can see, and then although it wasn't a fill, right? But everything else was perfect. So let's go back to our chart. First of all, let's identify the sweeps, all right? We can see that we have a sweep here above this high, this high, this high, and this high, right? So we liquidated this equal highs right here. We have a sweep here, right? And then price traded higher, and here we have also a sweep, and then price traded lower right here, and then one more time sweeping these 2 highs, this one and this one. So as you can see, we have this high and this high. These two are equal, or they are smooth edges, right? So this high didn't run this high. Same here, this high didn't run this high. So these are smooth edges, and we run them both, right? And then here we have also a sweep, but we're going to talk about that later on. So these are the sweeps that we have in this example. Now let's identify the tops. All right, so as you can see, I'm not outlining the sweeps like this one or this one or this high or this high. Only operate at the bottom of the range, top of the range. After the sweep, we need to identify the top. All right, so tops, we need zones. Here, as you can see, let's move this out of the way. If you take a closer look at this, we have that first type of a zone. If we follow the candles all the way to here, and then to here, and then all the way to here, right? Because this one, this candle didn't put in a new high above this, so all the way to here, and then we have the body closure right here. We have the flip inside the candles, as you can see here. So this is a zone. Let's outline it all the way to here. Not this candle right here, but this candle all the way to this high, because again, this candle didn't put it a new high. So if this body was above this wick, then I would outline only this candle. But now we outline these candles right here, these two candles. This is the first top. As you can see, we have a sweep and then a top, and then here we have a sweep, and then we have also a top on this zone right here, this fractal. If you go to the 5-minute time frame, this is a beautiful fractal. It is something like this. All right, so this high right here, from this high to this low. We also forgot this sweep right here, so this is also a sweep, right? So this is also a sweep. We have a sweep and a top inside this one right here. All right, this zone right here. So this is also a sweep. And then here price tops into this zone and then trading lower into this zone right here. All right, so another zone, in this case mitigating 100% of this zone, and then one more time trading all the way to here into this zone, right? And this time mitigating 70% of the zone. This is like 80% of the zone. So one more time trading lower, and then sweep and a top into this candle right here. So this is also a zone, right? A candle structure shift zone. So we identify the sweep, we identify the top, and now all we need is the flip. The flip, I like to use a time frame below the time frame that we are in. So for example, if I'm on the 15 minutes, I like to use the 5-minute time frame, not the 1 minute. I like to use the 5-minute time frame to identify the flips, the candle structure flips, right? If you are on the 1-minute time frame, I like to use the 15-second time frame. So let's say, for example, the 1 hour, I like to use the 15-minute, and so on and so on. So let's go to the 5-minute time frame and identify the flips. So starting with the first sweep right here, this is the first sweep. This is check, right? The top is also checked. We topped into this zone, as you can see, beautiful zone. And then we need a flip. So do we have a flip right here? Yes, we have a flip. This is the flip. This is the last candle or the last low or the last high that created the low below the previous low. So this is a flip. As you can see, price traded above this candle and it returned back to the 50% of the flip, right? The candle. And now you can take your entry. You can take it from the 50%. You can take it once price taps into the zone, and you can take it maybe to here, to this unmitigated zone, or here. All right, it doesn't matter. So this is the first sweep. All right, beautiful trade. Sweep, top, and a flip. Let's identify the next flip. Right, we have a sweep right here. We also have a top inside this zone, right? Inside this zone. And do we have a flip? Yes, we have a flip right here. As you can see, price closed below this candle, so not here, all right, not here. This is only a wick. For me, I like to use body closures. So we close below it here, we return back to it here, right? And this is also a beautiful trade that satisfies all the conditions right here. The sweep, and then a top, and then the flip right here. And as you can see, price traded lower. So let's look for another scenario. We have a sweep, right? This is check. We have a top into the zone, 100% of the zone, and then we have a flip. Where is the flip? Not this, but this one right here, all the way to here. Why? Because these are only wicks. So this, the high of this candle, this long candle, it created this low right here. We don't have any lows below it, not with body closures. There are some dtfx traders that can consider this a new low, and they will take this right here. But I like to be cautious, especially in ranges. I like to stick to the rules. Thus, I take this right here. So we broke above it. We return back to the 50%, right? And as you can see, another beautiful trade that satisfies all the conditions. Sweep, top, and then a flip. Let's look for another example. And this is the trade that I shared on my Twitter account, because I wasn't around to see all these trades. So I arrived at the chart at this time, and we had right here a beautiful sweep. We have a sweep right here. We have a top into the 70% of the zone, and then we have a beautiful flip. So in this case, and we have a beautiful flip right here, candle structure flip, right? All the way to here. And then one more time the sweep. So I put my limit order right here, and price left without me, unfortunately, right? But if we treat this as a new sequence, as the sweep, top, and then flip, here we have the sweep, we have the top of the zone, and now we have the flip right here. Price comes into the zone, right? And then it traded lower, beautifully traded lower. Some of you will try to trade this, but now let's study this sweep right here. So as you can see, beautiful example. This is perfect, and every single range is following the same sequence, the sweep, top, and then flip every single time, guys. Here we have the sweep, we have the top into a zone, so the first condition and the second condition is checked. Do we have a flip now? No, we don't have a flip. Where is the last high or the last candle that created the low? This candle right here. We don't have any body closures below this low. Thus, we don't have a flip, all right? We don't have a flip. This is not a valid setup to take it to the upside, all right? This is not a valid setup. We don't have the flip. So, I believe now this is the end of this video. Don't forget, go and collect chart examples. Whenever you see a range, apply the same steps that we use in this video, right? And then try to get setups, all right? Get used to trading ranges, all right? Don't apply this in live trading environment. Backtest it, demo trade it till you gain confidence, and then go trade it live, all right? So if you have any questions, leave them on the comments or DM me on my Twitter account, and I will answer you as soon as I can. Now, happy trading and good luck.